Today's video is going to be all about what I think might be the best ETF to help you retire early, to find your financial freedom, and to get a great dividend. Welcome to the channel. My name is Liam, and this is Larch Investing. Here we talk all about investing for Canadians. However, this ETF that we're talking about today applies to basically anyone. This is SCHD, which is the Schwab US Dividend Equity ETF, and is probably the single best dividend ETF that I at least have found. Now, this ETF has been talked about in great detail here on the internet, but I'm going to talk about it from the perspective of somebody who is investing to retire, who has a nice long time frame to invest for, and who is interested in a dividend growth strategy. Now, there are lots of different strategies that might fit. The idea of a dividend growth strategy that we're going to use today is essentially that you want to invest in something that is diversified, that is safe, that pays a dividend and grows it consistently year on year on year, so that you can count on that growth in the long term to snowball and create this massive dividend at the end that should be able to help a retiree pay their bills without cutting into their original investment. So let's talk about SCHD. Let's talk about why I think it's such a great dividend. Let's talk about why I think it's great for retirement. And let's talk about why it's especially great for Canadian investors like myself who are looking for a way to get access to the US markets. In today's video, I'm going to give you 3 reasons why you might want to own this ETF. And the first of these reasons is right there in the name. It's a dividend payer. Now, dividends are great. Lots of people talk about them. There's lots of opinions about them there on the internet. But as a Canadian specifically, and honestly, just as somebody who is looking for a way to make money directly from my investments, dividends are the way. Now, I understand that they don't necessarily come with stocks that grow the same way that non-dividend payers do, that manage to just reinvest all their cash into the business. But for legacy, strong compounders, dividend payments are common and are awesome. And SCHD pays a dividend of around 3.4% as of recording this video, which you might think is not amazing. But if you compare that to something like the S&P 500 that only pays 1.5%, all of a sudden the dividend looks pretty good. And the thing is that you're not buying this today for the dividend it's paying now. That dividend you should be reinvesting back into this because you're planning on using this for retirement. You're not retiring right now. I'm certainly not. I have many years. And anybody who's starting an investment portfolio for retirement probably isn't thinking they're going to take it in the next 2, 3, 4, 5 years. But instead, the best part about this ETF is that that dividend comes with a 12% growth rate. What does that mean? It means that on average, over the last several years, this has grown at about 12% a year. So whatever that dividend pays now, it's going to be increasing faster than even the average of the overall market, which means your payments won't be 3.5% on your original investment. They could be an order of magnitude more than that. The classic investor that you think about when you think about growing your dividends is Warren Buffett. Think about his Coca-Cola shares, which now pay him a yield on cost that is dramatically higher than anything available to any of us today. And using something like SCHD, you can also have a dramatically higher yield on cost. You can have something that is growing, that is safe, that is diversified, is all these things we'll talk about later in this video, and have it paying you 10, 15, 20% on your original investment. The earlier you invest and the more consistent you are and the more you reinvest those dividends, the more fantastic that dividend payment is going to be. So this growth rate, which beats out just about any of the other safe, strong, reliable dividend ETFs I could find out there, is really, really impressive. The second reason of 3 that you should own this ETF is because of the quality portfolio construction. One of the things that I do on this channel is I talk about my process of researching stocks, learning about companies, picking things to go in my portfolio, trying to keep up with these companies and manage my portfolio. And it's honestly a lot of work. Now, I love it. I think it's so much fun. But most people don't want to spend a bunch of extra time on the weekends, in their evenings, researching the companies that they've already invested into and keeping up with exactly what their fundamentals look like, what their cash flows look like, what their growth is looking like, if there have been big changes in those companies. That's just not something most people want to do. And instead, it's a lot better for most people to give that work to someone else. Now, you could pick somebody who is a mutual fund advisor and pay them 2% of your portfolio every year. Or you could pick something like SCHD that has strict rules as to what exactly goes into this portfolio that will make sure that you are only invested in quality. They rebalance this portfolio fairly often, and they have picked some quality companies to go into it. Are they batting 1,000? No. They do miss every once in a while, but no more than you or I would. And so having all that work done by a professional that you don't have to pay a huge amount of money to is amazing for your peace of mind and for your long-term conviction. Allowing somebody to be managing this and being diversified among all these different quality companies allows you to sleep well at night, because you're not worried about if a market event is going to impact your portfolio, because the companies you've picked and you're invested into have strong balance sheets, have solid cash flows, and can afford to pay the dividends they're paying you. You're not worried about yield traps and companies running up debt. Honestly, it's a massive, massive benefit to most people's retirement accounts. The third reason here, and it's one that I'm gonna keep talking about, is low fees. These guys are charging you 1/6%, and that's just fantastic. That tiny little fee is going to take so little away from your compounding over time compared to, again, a mutual fund, compared to even the risk you take investing in single stocks. Think about that. You are paying a tiny, tiny, tiny percentage of your portfolio to not have to make any of the decisions, to not be making any sort of single stock risk, and to not be doing all of the work, to not be spending all of that time doing all of the work building this portfolio. It's one of the things that make ETFs in general great. And it's one of the reasons why I think people who are looking for an easy way to invest for retirement should be looking seriously at this company. Now, talking about keeping costs low, this is also going to have the double whammy of keeping your tax costs low as an American or a Canadian. If you are a Canadian and you are investing in something like this that pays out qualified dividends, which has some meaning behind it, but not really enough that we're going to talk about it in this video. But if you're investing in an ETF or a company that pays a qualified dividend in your RRSP, in your retirement account, your Canadian retirement account, and it's an American company, you don't have to pay any withholding tax on those American dividends, which is fantastic. It means you get access to this whole giant American market of great dividend paying, cash flowing companies for such a low price. Now, again, you could be going out there, paying fees, finding funds that offer some of these returns in Canada, or you can go just across the border, use your retirement account, because this is best for that longer term growth. So it's best for a retirement style portfolio anyways, and gain all of this market expertise just by clicking a button. Seriously minimal work. And I think that is awesome. So I think the return here for the fee you're paying is pretty fantastic. And honestly, there are more reasons why you might be interested in owning this fund than just the three I've talked about in this video. But I think those key three reasons are good enough for me. It's a good enough reason that this is going to be at the very least part of my retirement portfolio. As I fund my RRSP, SCHD is going to be in there. And with the exception of Schwab making some really serious mistakes or maybe restructuring in the future that I can't account for, I think this fund is going to be there for the long term. It's performed really well over the last several years. It has a lot of things that I appreciate. It's hitting some great numbers. And of course, we're seeing all of the things we've talked about already in this video. Now, I do understand if you've made it this far in the video, you might be asking yourself, okay, what's the catch? What's the drawback on something like this? And it's something that I think is worth talking about, because by focusing in on a dividend strategy, you are missing out on some growth you might be missing out on specific companies that are really, really quality that most of us should probably be invested in that don't pay dividends. That's always a risk when you're doing this sort of factor specific investing. But as far as dividend paying ETFs go, this one might be king. And it seems like, from everything I've seen, it's been sort of the consensus king for a while. So that's about all I have for you guys today. If you enjoyed this video, if you like this kind of content, please subscribe to the channel, like the video, and let me know, are there any other ETFs you'd like me to talk about? Any specific companies you'd like me to talk about? We're doing a little bit of branching out coming into this new year. We want to talk a little bit more about American and Canadian companies, talk about the kind of things that Canadians are probably investing into. And we're going to be talking a little bit about sort of bigger market things that are moving. I'm really excited. Subscribe to the channel. Stay tuned for all that.